Welcome to the 121 meetings. My name is Joe Hamilton. I'm the CEO of Unigold, and I will give you a brief introduction to the company. As I go through this presentation, I will be making some forward-looking statements. The information is accurate as we know it today, but it may change in the future. Unigold is listed on the Toronto Stock Exchange. It also has a quote on the OTCQX market in the US. Current market capitalization is between $35 and $40 million. There's about 126 million shares outstanding. We have about 20 million warrants as well associated with an issue that we completed in August of 2020. If those were exercised, those warrants would bring in approximately $6 million. With options, our fully diluted position is about 160 million shares. Our largest shareholder is Eric Sprott. He owns 17% of the outstanding and about 19.9% of the, on a partially diluted basis. Officers and directors own approximately 5% of the company. Our principal asset is in the Dominican Republic. The NEITA concession is on the west side of the Dominican Republic, close to the border with Haiti. It occupies part of the island arc, the mountain range that runs from the northwest to the southeast through this part of Hispaniola, is an old volcanic island arc of Cretaceous age. Also in the Dominican Republic, for those people that aren't familiar with the country, Pueblo Viejo, one of the top 10 mines in the world and probably around number 3 as far as annual production is concerned, is in the country. It's a joint venture between Barrick and Newmont. That mine has got about 6 to 7 million ounces in reserves and about another 15 million ounces in resources. It's been in production since 2010 under Barrick and Newmont. Prior to that, it was in production in the 70s and 80s. There's also a nickel laterite mine that is owned by Glencore through their subsidiary American Nickel. And there is a small copper gold producer in country as well. Those are basically the metallic mines, but the economy of the Dominican Republic is the largest in Central America. It's a diversified economy with agriculture, manufacturing, exports of cement and raw materials as well. So a dynamic place to be doing work. The NEITA concession is about 22,000 hectares. We have been actively exploring in this area since 2002. We really got serious about exploration in 2010, 2011. We focused our time on the Candelones deposits, which are shown on this slide in the lower left corner of the concession. In between 2011 and 2013, we put about 65,000 meters of drilling into this area and defined a 2 million ounce inferred resource there at Candelones. The rest of these targets and stars that you see on this map are drill-ready exploration targets. All of the groundwork has been done. We'll move out and start looking at some of those later on this year and for the next few years. In the meantime, we're trying to develop Candelones, completing engineering studies on the oxide portion of this deposit and continuing to expand the sulphide portion of the deposit. The layout of Candelones, oxides are on the west side. This is a sort of a long section looking north. The sulphides and the sulphide pit are shown here. This was an optimized pit that encompassed the resource that we put out in 2013. As I said, there's about 65,000 meters of drilling between 2011 and 2013. There was about 30,000 meters of drilling on the oxide and sulphide portion of the deposit and a little bit of scout drilling. There was no drilling up until this year to the east of the pit. We put out early in March a drill hole with a new oxide discovery to the east of the pit, as well as some deeper intercepts in the sulphides below what was the old pit boundary. We're currently engineering the oxide portion of the deposit in preliminary feasibility study, and we are also currently updating the sulphide resource estimate. Both of those studies should be out towards the end of March or early April. As far as the oxide target is concerned, there's a 92,000 ounce measured indicated resource plus another 38,000 ounces in inferred resources. That's all within 30 meters of the surface. It's a fairly low strip ratio, about 0.2 to 1. We're looking at putting this into production using a heap leach technology, which results in a very low environmental footprint, low strip ratio, no waste piles, no post-production tailings ponds. Production rate will be about 25 to 35,000 ounces of gold per year. Putting in this small operation does a number of things for us. It allows us to train a workforce in the area. It allows us to set up our logistics. But most importantly, it supports an application for a mining license over that part of the concession. Mining licenses are granted in the Dominican Republic for 75 years. So it gives us tenure over the ground for that length of time. The sulphides, though, are the big win and also the bulk of the resource. There's approximately 1.5 million ounces in that pit optimized resource from 2013. But since that time, we've put about another 30 to 35,000 meters of drilling into the resources, looking at high-grade sections in the resource area. We are currently updating the resource estimate to include those 30 to 35,000 meters of drilling, and those are principally on higher grade sulfide material that's running over 3 grams. So I think that you'll see shortly, towards the end of March or early April, an update to the tons and grade that is available to us in the sulfide portion of the deposit. To give you an idea of what that looks like, here is the Candelones deposit. You're looking effectively north. The pit, the drilling, as well as the low-grade mineralization is shown here, and the high-grade mineralization is shown in the dark red blocks that are shown here. If we remove the drill holes, you can get a better idea of what the pit area looks like. Once again, the low-grade mineralization is shown in the lighter color. The higher grade mineralization that we've been drilling is shown in the dark red. And if I remove the low grade mineralization, you can see that these higher grade areas certainly are continuous. We've done a fair amount of drilling into them, and they're fairly thick and broad and consistent mineralization over those widths. Just putting it back together, you can see what falls into the pit and what is currently lying underneath the pit. To give you another look at that in what is effectively a cross section, Target A is one of these high grade areas. Target B is also a high grade epithermal overprint. Earlier in March, we put out our deepest intercept to date on Target B, which was 7 meters at about 22 grams of gold per ton, with appreciable copper as well, about 2.5% copper, and silver as well. Also in early March, we put out the results of 2 other drill holes, 167 and 169. We discovered outside of the pit limits a new sulfide area, 12 meters at about 6 grams. There's only 1 drill hole into this, but we expect that this will turn into another larger epithermal mineralization in this area. So we continue to expand those and continue to drill. Once again, a long section, you can see the old pit outline here. Give you an idea of what some of the intercepts look like. These are within these higher grade intercepts. This is not included in the resource estimate, but it will be towards the end of March, early April with the new resource estimate. But very broad intercepts, a very consistent grade in both targets A, B, and C. So to give you an idea of what the potential price catalysts are for our share price and for our stock this year, as I said, the oxide resource, we're completing a pre-feasibility study on that. That should be out towards the end of Q1 of this year. We will use that pre-feasibility study to submit an application for an exploitation or a mining license. And then throughout the rest of the year, we'll complete the bankable feasibility study and assemble the final permits. The sulfide resource will update the resource estimate in the first quarter of this year. And then we will carry on in the second quarter and do trade-off studies for open pit versus underground mining in that area. Once again, the open pit may allow us to maximize the resource. However, some of the low-grade mineralization will require a fairly large strip. So we'll look at both underground and open pit operations there. And then we'll, of course, continue exploration. These deposits are by no means closed off. We continue to have exploration to depth and along strike where we're making new discoveries and increasing the resources that are available to us. And then later on this year, we'll start looking at some of those regional targets. We'll move out and prioritize them, and then we'll start exploration drilling on those, such that we should be able to hopefully make announcements on new discoveries towards the end of this year. So thank you for joining Unigold, and I look forward to talking to you during the 121 conference. Thank you.